Okay, so we're back to Accounting 1, Chapter 5, Section 3. This is the second part of the video. Okay, we have done a dishonored check, so now let's journalize an electronic fund transfer. An electronic fund transfer is basically when you transfer money electronically. Many times this is done on the computer, or you can call on the phone to do this. The definition on page 131 of your book is a computerized cash payment system that transfers funds without the use of checks, currency, or other paper. So the computerized cash payment systems that transfers funds without the use of checks, currency, or other paper documents. Basically, you're doing it electronically. Many banks or many businesses choose to use electronic fund transfers to pay their other vendors. What account, when you journalize an electronic fund transfer, because we did not write a check, what account is going to be credited when the electronic fund transfer is used to pay cash on account? Well, we are still going to be crediting cash. So we're going to credit cash, and we're going to debit our accounts payable. Okay? Same thing as if we had written a check, except it's not a check. So let's journalize this one. It says record the transaction on page 12 of the General Journal. This is for September the 2nd, September the 2nd. And we paid cash on account to Kelson Enterprises of $350 using EFT, or electronic fund transfer. So I'm going to go ahead here and put the accounts payable dash Kelson Enterprises. Okay, document number, because we don't have a check, we have to do a memorandum. So it's memorandum number 10, so M10. We're going to go ahead and debit the accounts payable because we are reducing the amount that we owe Kelson Enterprises. And we're going to credit cash because we are reducing the amount of cash that we have in our checking account. So just exactly like writing a check, except we used a memorandum instead of an actual check. Okay, similar to an electronic fund transfer is a debit card. So a debit card, so define a debit card, a bank card that automatically deducts the amount of a purchase from a checking account of the cardholder. So the debit card is the bank card that automatically deducts the amount of the purchase from the checking account of the cardholder. I want to clarify there are debit cards and there are credit cards, and they are completely different. A debit card is going to work just like writing a check, except you don't have the paper check. It is done electronically. You are actually, the money is coming out of your checking account at the moment you swipe or give your credit card number to somebody. Debit card number, sorry. A credit card, when you swipe it or use a credit card to pay for something, you're not actually taking the money out of your checking account at that time. It's kind of like getting a loan. So a debit card, you are paying for now. A credit card, you are going to pay for later. So the credit card company is going to give the vendor or the person you're paying the money now, but then you owe the credit card company later. So it's kind of like a loan. A debit card is the exact same thing as writing a check. Do not use your debit card unless you have the money in your checking account. So what account, whenever we journalize this, what account is going to be credited when a debit card is used to purchase supplies? Well, again, we're going to have a credit to cash because we are subtracting the amount of cash that we have in our bank account, just like when we write a check. And we will debit supplies because we are increasing the amount of supplies. So record the transaction on page 12 of your General Journal on September the 5th. We purchased supplies, $24 using a debit card, memorandum number 12. So I'm going to put supplies here. Come over, just exactly like writing a check, except this is not a check. It is a memorandum, so it's M12. We're going to debit supplies because it is increasing. And we are going to credit cash just like we had written a check because our cash is decreasing. We just did it with our debit card instead of with an actual paper check. So your homework. We're going to go ahead and do 5-3 work together. It's in your book on page 133 and your workbook on page 97. If you continue watching the video, we will work that one together. Then you're going to do 5-3 on your own. Again, in your book on page 133 and your workbook is page 98. Then come back to the video and double check to make sure that's right. And your homework that you're going to do is 5.3 application problem. In your book, you'll find that on page 141. And in your workbook, that'll be on page 104. So go ahead and get your workbook out. So here is our work together problem. The directions in your book say, write the answers to the problem. Number 1, enter the following transactions on page 6 of a journal, and there are 3 transactions that we're going to be recording. So first of all, it tells us that this is page 6, right? Page 6 of our journal, so we need to go ahead and put page 6 under the page number. Okay? It says on March the 15th, we received notice from the bank of a dishonored check for Christopher Icola for $63 plus a $10 fee for a total of $73. So we wrote out memorandum number 1. So the date on this one is the 15th. The account title that we're going to use is accounts receivable. I'm going to abbreviate this for Christopher Icola. And the reason why we're doing accounts receivable is because he now owes us the money. Document number, this is memorandum 121. And we're going to make this a general debit because the amount he owes us has increased. And the amount we're debiting is actually the amount of the dishonored check plus the service fee because we want to collect the service fee from him also. And then on our cash, we're going to credit the amount because we need to show that we no longer have that in our checking account. Okay. On March the 16th, we paid cash on account to Spazoa Enterprises for $135 using electronic fund transfer, and this is memorandum number 122. So on the next line, this was the 16th. It is accounts payable because we are paying somebody that we owe. Dash Spazoa Enterprises. Because we did not write a check, we had to create a memorandum. So this is memorandum 122. We are going to debit this account because we owe them less money than we did. So we need to take that out of our accounts payable. And we're going to credit cash because we now have less cash than we did. Okay. The next one says on March the 17th, we purchased supplies for $31 using our debit card, memorandum 123. So this was on the 17th. We purchased supplies. Supplies does not have a special column, so we're going to write supplies. We don't have a check number. Instead, we have a memorandum number. This is memorandum number 123. We're going to debit supplies because supplies is an asset and it has now increased. And we're going to credit cash because just like writing a check, our cash has went down by $31. Okay, that's all of our work together for 5-3. Go ahead, pause the video and do the on your own problem together and then come back and double check your answers. Okay, and here is what your, oops, wrong one. And here is what your 5-3 on your own problem should look like. You should have everything here should be a general debit, and because it was just like writing checks, everything should have a cash credit. So double check, make sure you did that right, and then go ahead and do 5-3 application problem as your homework. Good luck!